Welcome to the NEREJ NYREJ podcast. I'm your host, Rick Kaplan. My guest today is Harrison Klein, and he is the head of the Klein Group at Marcus and Millichap. Hi, Harrison.
Rick, how's it going this morning?
It's going great. Tell me a little bit about Harrison.
Yeah, so I'll give you a brief history lesson on me. I grew up in Brookline. My first job ever was taking change out of laundry machines at my dad's apartment building. My mom actually took that job away from me. She didn't like me walking down the street holding bags of money as a 5-year-old. But from there, I did some construction jobs as a kid, went to the University of Miami, and then actually graduated in 2010 at a time where, particularly down in South Florida, the world had really blown up. And I was able to carve out a niche for myself, brokering small commercial properties, typically $100,000 to $200,000, things like warehouse condos, office condos, 6-family apartment buildings. And so I really saw what happens when the world goes wrong from an early age in my career. I then came up here to be closer to family in 2016, started at Marcus and Millichap with a focus on office and industrial buildings, and was able to build out a team. We focus primarily in the $2 to $20 million private client space. So most of my sellers are legacy owners, families, some owner occupants, people that have owned buildings oftentimes for 10, 20, 30 years. And frankly, a lot of my sellers have never sold a building before, maybe sold a building 20 years ago, but we work to get people up to speed on that and help them transition into the next phase of their life. Really, I'm a retirement advisor just as much as I am a real estate person.
So you're familiar with the 1031 exchange, obviously.
Yep.
That's the kind of clients you're dealing with. So you're mainly dealing with the industrial and the office sector.
Exactly. Yeah, I'm a big believer in specialization. We have great teams at our office that work in multifamily, that work in retail, that work in self-storage. What drew me to really first office and then industrial, I think they're great product types for that private investor, where you don't have as many headaches as you do owning, say, a 6-family apartment building where you're getting calls in the middle of the night on a constant basis. But you also don't need millions and millions of dollars to get started. Oftentimes, someone can buy a building with a $500,000 down payment on one of these buildings that we sell. Also, on many of these smaller buildings, your risk profile is different than on a retail asset, where if a tenant leaves, say, an industrial building that we work on, typically it's really 4 walls and a ceiling is what I say about industrial. Tenant goes, you put a new tenant in, typically inexpensively and in fairly short order, which makes it a more appropriate investment type for someone that maybe isn't prepared to weather 12 months or 24 months of vacancy between tenants.
Now, industrial has been hot for the past few years. So is there a shortage of space right now? Or are you able to find properties that are, for what people are looking for? Is there enough out there?
There's definitely a shortage of space. It's almost like musical chairs, but with buildings, where every couple months someone has to get out of the circle and move out of market sometimes or retire, because there's just not space that's affordable for the entire market. What we've seen over the past, certainly since COVID, it really started to gear up in 2018. A metric that I like to use as a rule of thumb is that almost everything has doubled in value since 2018. So if you look at a market where, like a Woburn market, very hot market, buildings maybe were $100 or $120 a square foot in 2018. Those same buildings today are trading for roughly double that, $200 to $250 a square foot. A big part of that is tenant demand, that there's just simply not enough space for those tenants, particularly today for the smaller tenants. So we've actually done a good job of creating inventory in the industrial world that's almost all been geared towards very large occupants. So Amazon's the obvious one. Amazon went on a massive space expansion beginning pre-COVID, really taking off during the pandemic as we all started, everyone started buying stuff online. Certainly the baby boomer generation came of age as online shoppers during the pandemic. And so we built out a ton of space throughout the country and in Boston as well, around 495 and further out, that was geared towards these massive e-commerce operations, whether it was Amazon, Target, Walmart, Best Buy, Wayfair opened a large facility. So you had a lot of these big e-commerce facilities, and that's where the money was, because it takes not that much more effort to build 1,000,000 square feet than it does to build 50,000 square feet. And it's a lot cheaper per square foot to build that 1,000,000 square footer. So that's where the market was targeted. Similar to how multifamily, we built a lot of luxury products because that's what made sense. Very little was built to service the mom and pop businesses, the 5,000 square foot plumber with 5 trucks, or the mechanic or the machine shop. These local businesses are almost all operating now out of buildings that are 20 to 60 years old. And was primarily just math, right? You can make more money putting a big building up than a bunch of small buildings. So you saw these big buildings going up. And now my hope is that we'll start to see market dynamics and start favoring these smaller buildings, because I'm a big believer in supporting small businesses and creating the space that they need to thrive.
Well, now I see a lot of these Amazon warehouses that they had, or distribution centers. They halted any kind of construction on some of them, as well as they have closed some of them because they don't need as much distribution as they had when the pandemic was going on. And I'm sure that's going as well with Walmart and Best Buy, all the others, because the online shopping has probably dropped quite a bit because of people can go out and go to stores now. They don't have to buy online. So I wonder what's going to happen with all that space, because I noticed that there's some major properties that are vacant now.
There's definitely some buildings right now that are not being utilized, particularly in that larger building, that 75,000 square foot and up space. The question of e-commerce is going to continue to grow. It's never going to be 90% of goods. My friends, Marcus Millichap is a company that does a lot of net lease brokerage. And my friends on the net lease side always point at the metrics of all of the things that, how little shopping really is done online when you look on a national basis. But I think e-commerce will continue to be a major player in the industrial space. What happened is similar. I like to compare it to Starbucks about a decade ago, where all of a sudden you said, hey, wait a minute, there's a Starbucks on, I drive by 4 Starbucks on the way to work. This seems like too many Starbucks. And then you saw a lot of Starbucks start to close down, because when you're in this hyper growth mode in any business or investment, really in anything, the tendency is to overbuild, right? To oversupply the market of your good so that you can find out what you need. And Amazon seems to have found that point. They're still selectively doing some deals, but them as an individual company, they've really slowed down. So you do have vacancy rates that are creeping up across these big distribution facilities. A lot of that is because of development. When you deliver millions and millions of square feet on a speculative basis, you're going to push up the vacancy rate. And frankly, it was a good thing that the vacancy rate got pushed up a bit. We don't want vacancy rates of 1% or 1.5% or 2%, because then you're playing that musical chairs game, right? Where when a company wants to expand, the space doesn't exist for them to expand. Right now, you're seeing a vacancy rate that's creeping up towards 4% on large industrial in that 200,000 square foot plus range, which is really a factor of new space being delivered. We still have a vacancy rate on high-end, smaller industrial that's in the 2% range, which means 1 month or 1 week every year a space on average is empty. That means that there's no space. If you told me, if someone called me up today and said, I want to buy a building within 5 miles of Rentham that's 25,000 square feet, the conversation is not, okay, let me go show you three. It's not house hunters, right? House hunters, here's three houses, go buy one. And that was my whole career. That's what we did. It was, okay, you want to buy a building, we'll go show you three or four. Let's make offers on one of them and see if we can secure that. Make sure you had to have your financing lined up and all that, but there were buildings available for sale. Nowadays, the conversation is, let's figure out what you need. Let's make sure you can get approved for your financing. And then we're going to wait for a building to come on the market, similar to how home buying works today, right? If you want to buy a house, you're buying it the weekend that it comes on market or it's gone.
Now the retail, they've had this whole niche for of the e-commerce, but also the life science industry has come into the market, and especially in the Boston market. You talk about Cambridge. I mean, life science. Now, obviously, there's a lot of office space that is required with that, but there's also a lot of warehouse space and cold storage space that they look for. Have you had a problem with that, finding space for that type of business?
It's a really interesting question. It's something that's very unique to our area. There's similar clusters, Southern California, the La Jolla area, you do have some life sciences, but it's really a unique thing to New England that's really exciting, that is one of the elements that I feel helps to diversify our base. We're not just an e-commerce market. We're not just a tourism market. We have a lot of different industries. We have finance here, big finance here, hedge funds. We have life sciences here. Obviously, it's become really a driver of what we do. We have high-tech manufacturing here as an exciting driver of what we do. We have education. So I think that diversity is something that's really important if I look in comparison to a San Francisco, which is a tech town, right? That's what they do. A few things that people might not be aware of, they think of life sciences and they think Kendall Square, labs, cutting edge technology. What you have to remember is around that industry, you also have a lot of things that are a little bit less cutting edge. They're still certainly high tech, but the next step away, we look at 495 and you have these CGMP facilities, which are manufacturing facilities for pharmaceuticals, where you have a very high value add product and you have a product on a fairly short R&D cycle. So those, they like to situate these pharmaceutical manufacturing facilities near the research and development facilities so the engineers can oversee both operations and see both. So that's an exciting area of growth that a lot of people have been talking about, pharmaceutical manufacturing. As far as my day-to-day world, we work with a lot of older model, mid-size warehouses. And I tell a lot of people this, I can walk into a business and very quickly tell you if it's the future of New England or the past of New England. So the past of New England was stamping plastic, machining parts, right? These businesses that a lot of them moved overseas in the 80s and 90s, and a lot of them have moved, frankly, to cheaper wage areas. The businesses that are really succeeding in the manufacturing world here now, a lot of them are targeted towards medical, a lot of medical devices. A good example, we sold a building in Leominster that manufactures fiber optic cables for surgery, for arthroscopic surgery. So a cable like this big for that surgical procedure can sell for $300. That same cable that goes into your cable box on a wholesale level sells for $2 or $3. So you can afford to pay someone a really good New England style wage and you pay high real estate, all these high costs to produce that high-end cable. That's a good example of what we're seeing being manufactured here. Also, the Defense Department. We have a lot of big Raytheon, we have a lot of big defense contractors. in New England that a lot of people probably don't think about us as being a defense contractor town, but we are. And so we interact with a lot of people that service that industry as well, with very specific components that have to be manufactured in the USA and have to be manufactured to a very high specificity. I think those are two industries that I would be watching out for growth in. Any kind of high end manufacturing that takes advantage of all the great people that we have, the great labor force that we have up and down the spectrum of education levels.
Now, they just announced that the commuter rail, I think it's the commuter rail, is going to go all the way up to Hartford, Connecticut.
Wow.
So through Springfield and all that. And one of the issues always the bringing the help to the area. And you also say, affordable areas that where people can live and work would be someplace like Springfield and in that general vicinity, Holyoke, Chicopee, all those areas. Yeah. Where it's very affordable to live. I would think that might be some opportunities out there for industry to move into those areas. You're right on the Mass Pike, 495. Well, not so much 495.
Yeah.
You're on the Mass Pike kind of, and you go up to, you're very close to the Connecticut border. So do you think that would help alleviate some of the help with some of the options for some people looking for space?
Yeah, I think nodes of transit are very important to particularly the industrial sector. That if you look at a warehouse employee in the e-commerce space, they're typically not going to drive more than 20 minutes to get to a factory job. Those jobs tend to be fairly interchangeable. They oftentimes won't drive by another major employer. So if Walmart's warehouse is closer to you than Amazon's warehouse, you're probably going to work at the Walmart warehouse. So we see labor is often a constraint on development, actually, when you look at a major e-commerce facility that may want to be located in a location that does have an 100-acre piece of land is what you need for these. But where the workforce may not be there. That was certainly a conversation that came up when they built the Amazon facility, another very large, over 1 million square foot warehouse in Charlton, Massachusetts. Everyone may know it as where Treehouse Brewery is. Check them out, great beer. But Charlton is out by Sturbridge. There's not a ton of people there. You can pull people from Worcester, but you're a little bit far for warehouse employees from Worcester. So that was certainly a discussion point with a facility like that. I think that we're going to see more labor, more manufacturing that does get pulled further and further away. And then the reality also is we're going to benefit from automation, right? As a GDP of the state of Massachusetts will benefit from automation because manufacturing processes and other industrial uses that required 200 people in a facility are often now being done with 100 people. And now that creates obviously some problems. We want people to have good paying jobs and all of that, but it does create some opportunity where you can make a program cost effective for the business when you do automate more of that system. And so that's part of where we're expecting to see more business and jobs, but more business that is being onshored. And the other term is nearshored. So a lot of business nearshored typically means Mexico. So where you're seeing businesses being nearshored. But we believe that with continued concerns over technology, we'll continue to see not just e-commerce coming to New England, but a lot of this high-tech manufacturing, tough tech, one of the things they call it, and life sciences continuing to thrive.
Yeah, I mean, New England has a lot to offer as far as for any I think any type of business, unless it needs a warm climate year round.
Yeah.
I mean, that's the only thing that we kind of lack in the state. Uh, this area of the country. Now, you cover from Maine all the way to Connecticut, or do you go into New York as well?
I don't want to give you the wrong answer. Really, my area that I try and focus on is within an hour and 15 or an hour and a half of Boston. So I describe that as being Providence, Rhode Island, out to about Worcester, and up to Manchester or Concord, New Hampshire. We've definitely done some business in Portsmouth, really awesome town that's come into its own recently.
Love
We do
that town.
business. It's an awesome. I can't believe people are getting $3 million right now for condos in Portsmouth, New Hampshire. I couldn't believe that if you told me that 5 years ago. Yeah, and we'll go into Hartford. I think Hartford, from an industrial standpoint, is an underrated market as well, where you have significantly cheaper real estate. You do have people living there, and you're in that halfway point between Boston and New York, which can be a good place for some businesses to operate that maybe have a 2-hour shipping radius. So we do look at that market as well. Then we look at it at Central and Western Mass as well, where you see that Mass Pike 91 interchange is only an hour and a half from Boston. So if you compare that to a New York City market, the Pennsylvania distribution points that service New York City, a lot of those are in that hour and a half radius around that city. So I think we will continue to see different concentric rings that make sense. Boston also, you have to understand, is not a city where the vast majority of the population is in the urban core. I'm going to screw up the numbers, but I believe there's still less than 1 million people in the city of Boston. But as a market, we're much, much larger than that. And so when you look at, I'm going to pivot into office here, but when you look at industrial, a lot of our clients aren't servicing into Boston. That's not their business model. If you're in, say, Mattapoisett, or if you're in even a lot of these Worcester businesses, they're not in Worcester so they can service Boston. They're in Worcester because they service Central Mass. Like that's, and a lot of them, if you look at a lot of these manufacturers, they're global operations. I was just in a building that manufactures reagents for test kits, and they don't sell anything domestically. They sell in 25 other countries that aren't the US, and they're there because the boss of the company lives there, right? Because it's a functional place. You can get good staff, you can get supplies. We have good transit nodes here with the airport, with the seaport. To pivot over to office a little bit, I think we're going to continue to see a more localized perspective on where we work as well. That as Boston and the suburbs continue to build out, getting from 495 into Boston on a daily basis feels like something that people collectively said, hey, we're not going to do that anymore post-COVID.
You know what? I'm glad you brought the office part up, because I was going to bring that up. And, it's kind of a sore subject that sometimes some people are saying that, it's a tough market. And then I have other people that say, well, it's starting to make some kind of a comeback, and then there's also people saying that they're not refurbishing, they're trying to convert office buildings to like a multifamily, which is very costly. And I don't know how many we have going on in the Boston market, but I can't believe it's that many. So, you're the professional in the office industry. Tell me the real story. Is it really as bad as some are saying, or is it starting to make its way back?
So I'm in an interesting position where I sit in downtown. Like right now, I'm 2 blocks from South Station. I sit in downtown Boston. I'm here 3 or 4 days a week. The other days I'm on the road visiting properties. I'm a huge believer in in-person work. My team all sit within 25 feet of each other. The energy in our sales office, in our office, is what makes this job interesting for me, right? For me, I don't want to be at home all day on a computer. and then just close my computer and start cooking dinner. I like having that certain level of separation between the two activities, and I like being with the people that I'm working at. We do the vast majority of our meetings in person. Yeah, so I'm on team back to work, right? I'm on team let's work in person. I also have the benefit of living in Newton, right? I don't live in Worcester. If I had to spend 2 hours in the car every day getting to work, I'd probably feel a little bit different. I believe that the problem people have with in-person work is actually the commute and not the office. I'm sure some people it's both, but my team is all young. They live in Boston. They like being in the office. Doesn't take them 10 or 15 minutes on the train to get here. But I've seen some attrition from the office from people that live further out. And everyone can't live in Newton and Braintree and these towns that are right there. It's just not, I mean, A, it's a financial fact of life. And B, we just don't have enough housing there. So I think one thing is creating more housing close to the urban core in an affordable manner that allows people to live a good life where they're not in their car 2 hours a day. That's one thing that I'd like to see more of. Another thing is suburban office. So I really don't work on office downtown. I'm not a financial district office guy. The office that we work on is smaller buildings in suburban areas along 128, along 495, in Worcester, medical office buildings. A lot of these buildings were built, if you look at Boston in general, our building stock, the vast majority of office product was built 70s, 80s, and early 1990s as part of the tech boom. Before tech moved to California, they were here. I'm actually too young to really remember it. You probably were there.
Let's not talk about that.
Yeah, the Wayne computer days, they built these office buildings for these tech companies. And especially on 485, they built too many of them. And they built them for very large companies that were taking 200,000 square feet at a time. True corporate campuses. We now have these buildings that are left over. The ones with giant 40,000 foot floor plates in campus settings, we are starting to see those be demolished for life science and industrial uses, which is probably rational. We have a lot of product that doesn't suit what the market wants right now, that's built on really good land that has great transit orientation. So those buildings probably get torn down, maybe converted for residential, but a lot of those will be torn down and the land will be repurposed. Where we've seen a lot of success is in small floor plate office buildings, meaning each level of the building is 5 to 20,000 square feet, where you can put a 1,000 or 2,000 square foot office user in there. And I'm a big believer in that. I think small companies or teams within larger companies do want to cohabitate, do want to work together in a way. Maybe it's 3 days a week, not 5 days a week. I'm not sure about that. But we've seen clients to very good effect be able to repurpose vacant space by subdividing it and generate good rent. The story that office is just going to all burn to the ground over the next decade, at least in a suburban environment, I don't believe is true. You have to pick your horses. 1970s wood framed buildings, maybe harder to tenant. Tenants want nice space. One of the difficulties in the office market right now is that rents have been stagnant while costs have gone up. There are still tenants there, but it's gotten harder to make these make sense. You have to figure, and then you add on top of that, obviously interest rates are high, right? That's the talk of the town right now. I'm not a debt guy. I know enough to get myself in trouble, but rates are high. People are borrowing money at 7%. And so prices at some point will be impacted. But I believe people want to work in a third place. And whether that's through co-working of their own volition, whether that's I do a lot of work on, if I'm working on the weekends, I go to Lifetime Fitness in Chestnut Hill. They have a cafe. I sit there. It's quiet. I can get work done there. I like to be out of my house. So I think we're going to continue to see places that people work that aren't their living room, and it's yet to be seen exactly where that's going to be.
Now, I have seen some of these office buildings have taken some of the space and put amenities in, like a health club, or
Yep.
I saw one place, I can't remember, pickleball,
Yeah.
a pickleball court out in the back of the building, which, okay, I I'm not a big pickleball fan, but I guess there's enough of a population for them to do something like that, and that I guess will be bringing more people to come to the office so they can have some of the activities that they would normally do outside of their home. I'm guessing. How that makes sense for the property owner, I'm not sure, because I don't think they can increase their leases or their revenue by putting those amenities in.
Yeah, there's certain levels of resetting of expectations that are happening with buildings. I would point that also to, you look at residential buildings that are being built now, and amenities have been the name of the game for the better part of a decade. Whether that's putting in swimming pools or putting in gyms or co-working spaces, all these things have been being put into residential buildings. It makes sense to have some of those co-located with office assets. A lot of what's happening is it's an arms race. It's who can create amenities to win over tenants. And what happens if you take a floor and you turn it into a gym, well, now you have one less floor to rent out. That's a problem. And now you have an additional expense as well. They always used to say never buy a condo in a building with a pool unless you really want a pool, because you're going to pay for that pool, right?
Exactly.
And I think it's the same with these office amenities. And so you're finding different ways to create amenities that are things that people will actually use and that are cost efficient to have there, because we are seeing a lot of tenants now shrinking their footprint. So some of what I see, and we were just talking to a tenant the other day that wanted to go from a 15,000 square foot building into 5,000 square feet because they had a lot of remote work going on, but they still needed a conference center occasionally. They needed a 50-person conference room 5 days a month. And when you think about that, that's really not a great use of space to have on your own, right? A room that only gets used 5 times a month is really a room that should be a shared amenity somewhere, somehow. And they talk about the sharing economy, whether that's people that don't have cars anymore. People in Boston just Uber. I talk to people all the time that don't keep a car in Boston. So I think it's the same with some office amenities, whether that is the sharing of a receptionist, like a WeWork type concept, whether that's sharing of printing facilities, whether that's sharing of a conference room or of a break room. It probably makes sense from a space utilization standpoint and from just simplifying staffing to share some of these amenities. One of the things that's happened, I noticed, almost all of our clients' offices have a front desk. Almost never is there anyone sitting at that front desk. We don't have someone. We still have the role of the person that used to sit there, but they sit in an office capacity now because there's just not a constant stream of people walking into offices unannounced anymore with the technology we have. So it's really interesting to see how these things are changing. I think it's probably a good thing, right? There's always going to be change in the world. At the beginning of my career, when I started in 2010, it was getting rid of filing cabinets. I would walk in with an office tenant and they would have 5,000 square feet of paper, and they'd say, okay, we're gonna get rid of this paper and we can go into a smaller space. That was a big change in the office environment that really steered some vacancy for a while, because everyone downscaled space because they didn't need as much paper and they didn't need as many people because we had computers to do calculations or to do a draft, right? You got to remember, not that long ago, 20 years ago, you would handwrite changes on a document and someone would retype it for you. Yeah, so we're in a very different place technology-wise than we were 30 years ago, and that's still having an impact on the office market.
Well, we're also very good at adapting. You know, we'll figure out. Like I had a meeting with someone from Bloom,
Yep.
someone from Gutierrez, because we have an event every year with the Middlesex Three. So a lot of the property owners are involved in that. And one of the things we were going to talk about this year was the office space. And they had all these concerns about what's going on. And we always have the event in one of the vacant offices.
Yeah.
So, you know, like I said to them, these companies, Bloom, Gutierrez, they've been around for many, many, many years. They've gone through so many changes. To be worried about this, I can't believe they would even have that much of a worry about it, because they adapt to the changes and they figure out what they have to do to bring in the revenue, whether they have to add amenities, if they have to add like a condo fee to their rents, whatever they have to figure out, they always do. And then the market will change and they'll have more people than they ever wanted to move into office space. And there we go. We're back in business again.
Yeah.
Things always, like, like all parts of look at the retail industry. A lot of these retail places were dying. And now you get a lot of them that they're all starting to come back.
Yeah.
So
Yeah, I think on an industry-wide level, I'm very bullish on real estate. I'm very bullish, even that office will have a recovery. On a asset to asset and situation to situation basis, yeah, real estate's a contact sport, and there will be assets that need different ownership, right? There will be people that lose money in this situation. There are people that are losing money. We don't ever want to see people losing money. I think that there's some reality when you're investing that there's risk to it. And the types and uses post-COVID are certainly changing for a lot of things. If you look at, we've sold a couple of empty malls over the years. And you look at those facilities, a lot of them were only built 30 or 40 years ago. We sold a major private group the Swansea Mall and outside of Fall River for $5 million. That was a $100 million property a few years before that. They were able to put self-storage into that property and industrial uses in that property and revitalize it, create something for that community. And the community is now getting a lot of value out of that property. And so I think if you look on a community level, I don't think we have the kind of factors going on right now where we're going to see, I want to pick on an individual, but if you look at, like, say, Detroit, right? Detroit is an example of what can really go wrong when jobs leave a town, when there's a lot of unleveraged, unutilized real estate, and it just sits there decade after decade after decade. Now Detroit is having a renaissance. They got rid of a lot of that real estate, tore the buildings down, shrunk the city down, and now I highly recommend anyone that hasn't been to Detroit, go check out Detroit. It's really cool what they've done there, with a lot of adaptive reuse, with Ford putting money in, with forget the guy's name, Quicken putting a lot of money in there, and you've created really a vibrant city with a low cost basis where some really cool entrepreneurs are able to run companies there. Worcester's my favorite. My wife is from Worcester as well, but Worcester's my favorite example of a place where you have seen adaptive reuse to a large scale. You asked me before we got on this call about converting office buildings into residential. That's a place where that's really happened. Not so much these 1980s and 90s office buildings you typically associate with Boston, but the brownstones, the 1920s and 1930s bank buildings that are 6 to 10 stories tall. If you go to Main Street, Worcester, that whole area will be a residential district within 5 years. That is there. What happened is those buildings all became kind of not past saving in general, but the rents there were $10 a foot, and it needed $100 a foot to fix up the buildings for office. So you needed an alternative. There was no like, hey, let's make it work office. That was an office market that just didn't work, and the prices got to a point where, along with government support, so with the historic tax credit program, people were able to come in and create some really exciting housing opportunities in that market. Some of them market rate, some of them low income. But that was a market that really didn't have high quality housing. It was triple deckers. They pretty much outlawed the triple decker in like 1920. They're all 100 years old. They're all, for the most part, when you go into those markets, they're not optimal housing, and they're now creating a lot of larger scale apartment buildings, really high quality housing for the people that live in that city, out of office buildings and out of old industrial as well. Multi-story industrials and other mill buildings are another concept there where we've seen a ton of adaptive reuse. Probably, I don't know, somewhere in like the 20-30,000 unit range has been created throughout New England of these adaptive reuse projects in the last 20 years, thanks in large part to the historical tax credit program that will up to 40% of your construction costs can be reimbursed through that program. So it allows for a project that would not necessarily be viable economically to make sense for the developer, for the community, for the residents. I think that may be another thing that we see, is that there's some intersection of government involvement and developer action that allows us to create more housing out of some potential office stock.
Yeah, I think some developers stir that up, because they can have a vision, present that vision, and then the government and some of the people from the city or the towns, they start to get involved in that, and they can understand what can happen if we do the redevelopment of that area. You can see that happened in the south end of Boston.
Yep.
I mean, you might be too young to remember how bad it was in those areas, but some of those homes that, you talk about some of those brownstones that they redeveloped in the south end, some of them were like, they were falling down.
Yeah.
And now they're selling for millions of dollars, and a lot of people want to be living in the south end. So, things can change like that. It just takes a little time. They say if you build it, they'll come, but you have to have the guy that's willing to be the investor and the developer in the area. That doesn't look too great at this point, but at some point you'll have people wanting to move back. So, but it sounds like we're probably going to survive the office.
I think office is gonna do just fine. It's gonna right size, right? And we're gonna survive high interest rates as well. But I think office, it'll find its equilibrium. It might be a bit of a roller coaster ride for the next few years while we figure out what that equilibrium is. But we have so many exciting businesses in this city, in this region, that are expanding, that are doing really cool things, that I expect that will survive this kind of scary time as well.
Well, I think once we can get a public transportation system working properly, I think that's going to also help the downtown area.
Yeah.
Because that's been a big major issue, because you talk about sitting in the traffic for 2 hours. I can't imagine sitting on a train for an hour and a half to get 5 miles.
Right.
I mean, that situation has to get resolved so it can people can come into the city and work, and it affects everything. So what I don't understand is we have a beautiful water, oceanfront area of the city where goes from Cape Cod all the way up to Maine, why don't we have more ferries running? I don't know if it's because of the cost or what, but I mean, that would be a great way to bring people into the city. And I think it would be a nice trip. Every morning waking up, getting on a boat
Yeah.
and take a ride into the city.
You have it in Hingham. So our regional manager here in Boston, Tom Shahada, he takes the ferry in most days of the week. He lives in Hingham on the water, and he's able to avoid all that crazy expressway traffic by riding the ferry, and it works well for him. So I do see people taking that one ferry, but I think that is really the only one. Yeah, I love to see more transportation options. We've seen some commuter rail nodes that have been built. New Bedford and Pawtucket is a good example that they're building out into that direction. Although some of these commuter rails, you look at the actual data, right? There's great celebrations when they grow, but you look at the data and there's not a lot of ridership. So I think you have to figure out how to make these programs really make sense. And some of that is reliability, right? If the train can only get me to work on time half the time, it's not a legitimate way for me to get to work. Like a lot of people, unfortunately, my work's pretty flexible, but a lot of people, they have a job, they have to be there at 9 a.m. And if the train makes them late every second week, that doesn't work. That's not a job that they're going to be able to have. I think also there's some speed things that can be done with the commuter rail in terms of express trains and things like that would allow for it to become more of a viable option for people. Worcester's a great example. That train, I've taken that train numbers of times, and that train express takes about an hour and 5 minutes, and regular train takes almost 2 hours. But the hour and 5 minute train gets in the South Station at like 9:05 a.m. Like bad time for an express train. Like you gotta think there's some of these things that can be figured out. Certainly, we have a much better transit system. I lived in Miami. They don't have any transit there. They have like one little train that no one rides on. So I think we do have a good culture of transit, right? Transit, as I've traveled, particularly in parts of the US where there's really not a culture of transit, I think we have that culture of transit. If it's a good option, I think people will take it. I don't think that Boston people are quote unquote too good to ride the train. I think we could have that. You look at New York as an example where the train is the better option, and it works.
Well, the reliability definitely is the question that people
Yeah.
have about taking a train.
Yeah.
And I've been to China, and they have a high-speed train. We
Yeah.
can get from one end to the other end in about an hour.
Wow.
By car, it could take you 4 hours. The thing moves. But
Yeah.
I always think about, this country has developed so many of the technology. Why couldn't we come up with a high-speed train? I mean, it'd be ideal. But hey, we haven't yet, so I don't, and
Yeah.
we have trouble trying to fix our own public transportation right now. So I don't know. I don't know where that leaves us.
Yeah.
But anyways, I do appreciate all the information, Harrison. I know that we're not seeing a downturn and things aren't slowing down. You're still selling and finding tenants for these properties, and that's
Yeah. Interest rates are the topic of the day, right? High interest rates are changing the dynamic to some extent. One of the big things we're seeing as well is a lot of our clients are either family offices or high net worth individuals. They were not able to generate any yield leaving money in the bank up until about this year. For the last decade almost, it was you get 0% in the bank. Now you can I got offered a 5.5% CD, short-term CD, right? So you can get about 5% in the bank right now, which is making some people more comfortable sitting on the sidelines. We are continuing to see really strong buying activity, though. People in New England are typically buying for the long term. They're not asking, and frankly, if you're buying real estate, you shouldn't be asking, what's it going to be worth next year? You're asking, what's it going to be worth in 20 years, right? How can I generate return 20 years from now? And people are looking at the properties that are available today, and especially the ones that are conducive to their investments, right? That really fit their model, and saying, look, I'm not going to get awesome cash flow today, but I can buy this. I can get debt. Debt is still very available, if expensive, but available. And there's less competition in the market. And so it's a great time to go and pick up properties that you're going to hold for 10 or 20 years, particularly as a family ownership group or as an individual, and refinance when rates come back down. At some point, rates won't be 7%, right? At some point, those rates will come down. There'll be some opportunity. So our tagline has been marry the property, date the interest rate, right? The interest rate is going to change. You'll get your yield eventually. You may not have the opportunity to buy this building or this type of building in the future.
Well, before we go, because we're running out of time, the 1031 exchange clients, I know at the beginning of the year, we had some issues. We didn't know what was going to happen with the 1031 exchange. Obviously, it's still in place, and it's still a benefit for people that are selling and trying to buy. So I think you might have mentioned this at the beginning of the show, that people are still using that 1031.
1031 exchange is still very active. The total count of them, I'm sure, will be down significantly this year, just because volume of everything is down this year. The 1031 exchange is really a lifestyle tool. Typically, if you have a building with 50 tenants and you don't want to keep running around and manage them, and you want to be down in Florida relaxing, the 1031 exchange is a great way to go from, whether it's an apartment building, office, industrial, whatever it may be, to get out of your day, building that really serves as your day job, and get into something that is more passive. Or for some people, it's for finding the next value add opportunity. But it doesn't look like the 1031 exchange is going anywhere. There are great opportunities still in the net lease space and in the multi-tenanted space to get into the right building for you, for whatever that reason may be. So that's a huge driving force. Particularly now, we have a tax rate effectively on capital gains in Massachusetts of over 30% for a lot of people. And so the 1031 exchange is a great way to avoid paying that tax. And some people don't realize that your kids will end up with a step up in basis for most of our clients. So a lot of people are doing we call it swap till you drop. I'm sure there's a nicer way to put it, but the swap till you drop with the 1031 exchange can allow you to gift property to your children or to charity without paying taxes first, which is a great solution that's really only available to real estate people.
Well, we're talking with Harrison Klein, and he is the manager of the Klein Group at Marcus and Millichap. I want to thank you again, Harrison. Great information, and I enjoyed talking with you.
Thank you, Rick. It's always a pleasure.
And if someone want to get some more information, what's the website for your group?
So my team's website is kleingroupcre.com, KLEIN, group, CRE, like commercial real estate.com. They can also see all of our inventory and available properties on marcusmillichap.com. And my LinkedIn, Harrison Klein on LinkedIn, is where we post most of our content. And we try and put out some good articles. We write with you guys. So we're always trying to put some information out and help people out.
Well, again, thank you, Harrison. And I'm Rick Kaplan from the New England Real Estate Journal and the New York Real Estate Journal. And you're listening to the NEREJ, NYREJ podcast. Until next time.